can record.
Okay. All right.
Okay. All right.
Thank you.
Can we start now?
Yes, sir.
Can everybody hear me?
Yeah.
Yeah. Loud and clear.
Loud and clear. All right. Okay.
Yes.
So, first of all, right, we have support and resistance. Okay. We have support and resistance, SNR. We have the supply and demand. Okay. So these two things, okay, form how would I be put it? Support and resistance, okay, show us mainly levels market reacts in the market, okay, and supply and demand basically tells us where sellers are sitting and buyers are sitting. I don't know if my explanation is good. So support and resistance is basically levels market reacts from, okay, and supply and demand is where buyers and sellers react from. Okay, they may sound the same, but they are quite different. Okay, and each of them plays certain major roles. Okay, someone would say support and resistance is mostly high risk, right? And supply and demand is kind of like a low risk. Okay, so where in this scenario?
Oh, Yves have just responded. I'll say his body is weak. He can't join us.
All right. Okay, no problem.
Thank you.
Okay. Okay. So support and resistance entries, or let's say setups, are usually high risk, right? And supply and demand entries are to some extent low risk. Okay. So now,
Okay.
this is how it works. I don't know if this looks. It is. What did it take do all the intents for? Yeah, someone. See, guys, I'm not used to Zoom. Yeah, someone.
But you go feel draw from you. The
Okay, I get them. I get them.
you get them. Okay.
Yeah. So this is it. Support and resistance. This is how it goes, right? So where the market is moving, okay, it gets to a level, perhaps reacts on it, goes a bit higher, breaks, comes to the same level, comes, breaks, comes to the same level, goes up a bit, comes down, comes to the same level, and it drops. So I don't know, paper.
You open maybe trading view, Anna.
Yeah, maybe a trading view.
I think so. You can even draw on the trading.
Okay, let me use trading view. I wanted to explain. All right, so let me share the trading view.
Okay.
Zoom there. Oh. Can see now, right?
Yeah.
Okay, good.
Yeah. Yeah.
All right.
Yeah.
So I was saying, sir, the market can come, go higher, test this level, come a bit, break, even sometimes go up, come down, come test the same level and drop. Okay. In this
Yeah.
in this scenario, sorry, we are seeing more of support and resistance, right? Where the market
Right.
reacts on this level, comes to react on the same level, perhaps takes people who want to buy here and goes in the opposite direction. In the same way, people want to sell, takes them out, comes in their direction, comes to take the same level and goes down. Right. So
Yeah.
in scenarios like this, so this side is a support, we have a support, and we have what? A resistance. Right. So basically this is around support and resistance. Like I said, it's also high risk because you don't know whether the market will react from here and go up or break and continue down. Now it gets to the same level too. It goes up, now comes down in your direction, comes to test again and goes down. All the shakara movements. You understand? All right.
Yeah.
So you've noted this down. And there's also the supply and demand. Okay, where we have the drop base drop, where we have the rally base rally, where you have the drop base rally, and where we have the rally base drop. Okay, so these are the major, or let's say the supply and demand levels we have. Okay, where we know that at this drop base drop, the markets will come, react at the level and continue selling, right? Where we have the rally base rally, the market comes to that level and goes higher, right? And when we have the drop base rally, the market comes to test this level and goes higher. And when we have the rally base drop, the market comes to test this level and it drops, right? So these are the
Yeah.
four major types of supply and demand when it comes to buy strong. Okay, when it comes to buy strong. So let's look at these scenarios on the chart. Victor, are you following?
Yeah.
Okay, great.
Yeah.
So if I draw this major line, okay, now they call line charter. We have this major resistance. So this was support, right? This level was support.
Yes.
It became resistance. It became resistance. Do we all see?
Yeah.
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 So based on support and resistances, we can identify these major levels, right? Good. Now,
Yeah.
another instance is also here where the market reacted here and the market came to react at the same level. So now this becomes two major resistance levels, right?
Yeah.
Okay. So now we know the resistance and support and resistance. Okay. Now the same principle around that, we have supply and demand. Okay, where, like I said, we have the drop base drop, the rally base rally. Okay, so when we look at this markets like this, we have this drop beige drop here, right? We have this drop, beige drop, okay,
Yeah.
over here. So, so we mark. So what we do is we mark this whole zone as what? As supply, where we know that the markets will drop, come and test, and continue dropping. Okay. And yesterday I was telling Victor asked the question that it's every major market saying a demand level, and I said yes, because we have what we call the drop base rally, and we have what we call the rally base drop. Okay, so this is it. Anywhere we see the markets make a major turn, okay, it's a demand level or a support level. Okay, so this is a major demand level. This level is a major demand level. So because the market comes and makes a major turn, so it's a major level. It's a major demand level. This is a major demand level, major demand levels, because the market comes and makes a turn, right? So in other words, these two levels are major demand levels, right? And when the market also moves in the opposite direction, this is a major level, this is a major level, this is a major level, this is a major level. So all these things are major levels the market can come and react from. Okay, this is a major level that the market can react from. Okay.
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 So depending on where the market is right now, you can mark those major trends. Okay, so a typical one is this level. You can mark this level as a major trend, right? You can mark this level. This.
Hey, the line is breaking.
Can you hear me? Can you hear me? Wisdom. Hello.
Yes, sir.
Yeah.
Yeah,
Hello.
Okay.
it's better now.
All right. All right. So we have this rally base drop here, right? So in other words, this level is a major level, right? Now over here too, the market comes down and makes a 10, right? So even though we marked a major level here, now this level also becomes a major level. Okay, so right now in this current market situation, this is a major level, this is also a major level, right? Like I said, this level is also a major level because the market made a complete 10 here, right? So right now, looking at where the market is sitting currently, we have this major level where the market can perhaps come and test and go higher, right? Now, so let's move. So one thing I noticed is that, let me clear all this. One thing I noticed is that anytime, let's say, we spot a major level, right, around the markets, current markets movements. So for instance, last week like this, you mark this level, right? Over here, you realize that the market has tested this level several times. Okay, this support and resistance level several times. So, and currently this was a major 10, right? So I would have marked this level too. Now the next thing you do is, should move. We mark, we change to the candlestick charts, right? Now, the major level I marked, this very first one. Can you see my mouse?
Yes.
Okay. I pick,
Yeah.
right? and I mark from the red line to the wick. Do you see the wick? I mark to the wick.
Yeah.
And mark that zone down.
Okay.
Okay. Now, this major 10 over the current market level, right? If I look here, I'll also mark this major level from the body to the wick. That is, so it's within the wick that most manipulations happen, right?
Okay.
Okay. Now let's continue. So now that you've marked this level, the other things you also ask yourself is, now within that zone that I have drawn, okay, what other confluences do I have? Okay, now the other confluence you have is the support and resistance. Okay, now if I extend this level, okay, I realize that, oh, okay, now the market came to react inside this zone and it dropped. If I move backwards, I have these levels the market tested, right? So in other words, this zone is
Yeah.
a very good zone where the market can make a major turn.
Okay.
Okay, now if we move forward to this 4 hour, right? If I move to daily, let me see what daily is saying. Now in the chart, in the line chart, right? Daily is showing me this very sharp movement from this zone, right? And it's showing me a clear breakout in this zone. Okay.
Okay.
And for every, yes, so now support will now become what? Resistance. Right?
Okay.
Good.
Yeah.
Now when I change to candlestick, I have this major engulfing sitting here, right? And I have this double Mahabozo sitting in the same level. Okay. So now I know that this level is a strong level the market can react from. Okay.
Okay.
2, do you guys remember the confluence principle I taught you, where I say the market can make some moves like this, right? It breaks. So what happens is that the market we can mark these 2 levels where we have this first touch, second touch, and the next entry is in line with this zone where the market will drop. Do you guys remember this confluence?
Yes.
Okay. So
Yeah.
now, if I change to line charts and I mark these 2 levels, okay, where we have, and I said that this line or this trend line must not look very sharp like this. It must look usually diagonal in this way. If it's very sharp, it's very high risk. But if it's like the angle is like this, it's a bit low risk. Okay. So now if I mark that, now all I have to do is that I have this first touch, I have this second touch, and now my zone is in this level, right? So based on,
but
any question?
But can I?
Yeah, you can flow.
Yes. What confuses me sometimes, you
Okay.
see this touch that you've done.
Yeah.
For instance, I would have sometimes, I don't know whether I can annotate here. I would have drawn it this way or from here, from this line. So touching here, and then extend. And the last touch that you had,
Mm-hmm.
I don't know whether.
Oh, okay. Now you
So
see, sometimes to answer your question,
yeah.
this is daily, right? This is not like 15 minutes where this line. Okay, let me go back. Can you clear your line? Can you clear your line?
Okay, let me see. Hey, Asamaba. Okay, I think it's going.
Okay, good. All right. This is daily. If you go to daily and go and mark like this, Okomaki say that's like long-term thing. You see, let's say when the market is for instance, when the market has moved to this level, right? When the market is
Yeah.
around this level, you can mark this and say, oh, okay, it can be like let me say the market can come and react. And if it's coming to react, you can say, okay, it can react on this QM level. You see, so in this instance, unless the market is here, whatever I'll do, this zone is a long-term thing. You understand?
Okay.
Yes. But based on the fact that we've marked a zone here, this whole trend is, I would say, it's a long-term trend line, right?
Okay.
But
Okay.
based on the confluence I explained the last time, this too is my point of interest because the zone is around that. Okay, so it's about finding confluences around your zone.
Okay.
The zone is what all
Okay.
this matters. Okay, so right now, so for instance, this side, all this move hasn't happened, right? The next zone closer to it is this zone. You understand? Where we mark the major market 10, we mark we mark that line, that level with this line, and we go to the lower time frame to mark the wick. Okay, so it is the wick that has given us this extra zone where we see how the market reacts from. Understood?
Yeah.
Yes.
Yes.
Are we clear?
Yes.
Victor?
Yes.
Okay, good.
Yeah, very clear.
Okay. So now, before the week starts, we know that you've marked this major 10 and you've marked this major 10. So now the market is within these zones. Right?
Yeah.
Good. Now, there's also something in buy strategy called the second movement. I don't know if you know that.
Yeah.
You know the second movement, right?
Yeah.
Okay. So this is how it works.
I know there's something like that, but the explanation is not too clear to me.
I noticed. When I watched the video, the explanation wasn't too clear. So let me see if I can explain it to you very well for you to understand.
Okay.
All right. So this is how it works. So the whole point of their second movement is the fact that when the market goes higher, it makes a pullback and continues, right? This is all they refer to as second movement. This pullback is what they call the second movement.
Okay.
Okay. And if the market is dropping, they mark this as what's the second movement. Okay. So the whole principle around this second movement is the fact that, okay, is the fact that anytime we see a market move like this and we see this second movement on the right, always know that the second movement is on the right.
Okay.
Hey, I would say time is approaching. You have to start a Zoom. So they are saying that. So we have like 9 minutes. When it's like 2 minutes to time, I'll stop it and repeat. Okay. All right.
Okay.
So the second movement is this. So when I mark this second movement, what it's trying to tell me is that then this support level is stronger. You get it? In other words, because of this second movement, the market is likely to come and test this level and move higher. In other words, because of the second movement, this level is strong. So the second movement gives strength to the support level.
Yeah.
You understand?
Okay.
Now, if the market is trending downwards like this, okay, like I said, the second movement should always be on your right. It shouldn't be on the left. Okay. So what they do is, if I mark this level, right, this second movement is giving strength to this resistance level. So in other words, because of this movement, this zone is very strong, where the market can come and react and drop. Now let me explain in the charts. Do you understand the illustration?
Yes.
Yes.
Okay. Now let me explain it in the charts. So one of the SOPs they use is the fact that this second movement, they usually market in the higher time frame, like the daily and the weekly. Okay. So
Okay.
we're like when there's news. Okay, when there's news, you look at the second movement in the daily. But when there's no news, especially for gold, you can use the 4-hour. Okay.
Okay.
Good. So in this scenario, let's go to the 4-hour. But already we've marked that major zone already. You're marking a zone in that.
Yeah.
Okay.
Yeah.
Good. Now when I take it to line charts, right? When I take it to line charts, I have a very beautiful movement here. The market comes down, makes a move and goes down, right? So now I mark this zone as my second movement, right? Therefore, this major 10 is strong.
Okay.
Do you understand?
Yeah.
The second movement, is it always a short
Yeah,
thing,
it's just a
like
pullback. Yeah,
Yes,
it's just a
a
pullback.
short pullback.
So it's you see, and
Okay.
it can even so the market can even go like this. I'm just doing a line chart. It can even go like this and come like this. They'll mark this level as a strong second movement. So let's mark second movement on this chart, right? So the market makes a second movement and drops. So this is a second movement. Therefore, it gives strength to this support level here, a resistance level here.
Okay. But how about the one beneath the one you circled?
Here, right?
Yes.
So now,
Also a second.
yes, so now we have this move, we have the second movement, and you have this drop, right? So because of this second movement, the market can react on this level, right?
Oh, okay.
So now, because of this move like this, you mark this level as second movement. So therefore, the market can come and react here. You get it? Basically,
Okay.
that's second movement. That's what it is.
Okay.
Yes.
Yes.
Yeah.
Yes.
So now if I go to the daily also, you see, if I go to the daily, because of this 1, 2, 3, we mark this level as a second movement, and we mark this level as a strong support level, a resistance level. Right? If you take it to the line chart, you can tell. So if you had marked, so on the line chart, right, this is our level. We mark this as the level, right? Never forget how to mark the zones. Okay, first we mark the body. Okay, the line chart is a body movement chart. Okay, understand that, right?
Yeah.
And when I go to the candlestick, I mark from that level to the wick.
Okay.
You get it? So because of this second movement, this zone was strong. Once the market can be reactive or any drop here.
Yeah.
Yes, so that's the power of the second movement.
Okay.
I hope I'm not confusing you guys.
No, it's cool.
Good. And we have this move, we have second movement, and the market goes up, right? So we can mark this level, take it to the line chart, and mark the wick. So we can mark this wick here and say this is a major zone where the market can come and react.
Okay.
And which is also in the zone we've drawn earlier, which is this major zone sitting here. Are we on the same page?
Yeah.
Yes.
So the whole point, okay, of the Shakara movement and all this is for us to actually identify those major zones. Because if you realize that is where the manipulations were happening.
Yeah, it's true.
You see, so let's say I go to the 1R. Okay. If I go to the 1R, we will say, oh, QM, we see, oh, Charlie, I see QM for here. Oh. You see, QM is sitting here, engulfing candle is sitting here. You think, Charlie, I have to sell here. But they are interested in the zone. You do get it now. So it is the zone. So it is the zone they want to touch.
Yeah.
That's where they cause the manipulation. Over here to we'll see a QM here. But their interest is not the QM, their interest is the zone. So that's where the market will come and sweep all the buyers and go in the buy direction.
So in that case, how do you take advantage? Because we are using more of the QM.
Yes.
But from what I'm saying, there's no replacement scramble. Just bought room.
Okay. So now this is what happens. Or this is what I've noticed. That because we are interested in a major zone, okay. Because we are interested in a major zone, all we'll do is any entry above those zones are high risk. Always put that at the back of your mind. So for instance, the market is here, the market got here. Okay. Let's say the market got the wick, you see the wick rejection, like, oh, a tapping zone and TN tone. Okay. One of the things you should watch out is that always try, okay, and find your setup inside the zone, not outside the zone.
Okay.
Okay.
I don't know if I've answered the question.
Yeah.
So if you realize, okay, you realize that even though there was a rejection from our zone, right? Even though there was a rejection on our zone and we saw a setup, the setup was outside the zone. But our interest should be a setup inside the zone. So if you realize, if you go to lower time, if you realize that the setup was inside the zone. So anything outside, right? So for instance, if you pick your entry here, the market will come and sweep you and sit inside the zone, form a setup and continue.
I think we have less than 1 minute.
Okay, so let me stop here. Yeah. How do I
we rejoin it.
Okay. Hey, did this recording continue? Yeah. Okay, stop it.